Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, December 20th, 2013. Winding down the year here. This week, pretty big week really as far as news goes. We had the Federal Reserve come out the other day and state that they are going to cut their monthly bond purchases by $10 billion in January, and more than likely a measured, meaning another $10 billion each month thereafter until they're done. So probably until about the first or middle of September, and they will be completely done with their bond purchases. On the flip side, with some rather good news out of the U.S. Economic situation, GDP, which was the final revision today, came out at 4.1%. That's the best we've seen in really a couple of years, and much unexpected, because it was originally reported at 2.5%, and the revision went to 3.6%, and finally now 4.1%. So it was actually, everyone was in the first iteration in October was saying that it was because of inventory increases, and now we're seeing that the final here is that it was quite broad-based, and it was actually a very, very good, well-rounded number. So this could carry into the fourth quarter, meaning that, especially with the holiday season, that we could see growth above 3% for the fourth quarter, which would be very bullish for the dollar coming in to the new year, because that would signal some added value that wasn't normally perceived, or that hadn't been perceived up till now. So between that and the Fed tapering back on their bond purchases, that increases the value of the dollar substantially. That being said, let's go on to some technicals here. Next week, because of the holidays, there really isn't too much news. We do have a few things on Monday and Tuesday to note, some personal spending, personal income out of the U.S., and then durable goods and new home sales on Tuesday, and really not too much out of Europe until really the following week. And then at the end of next week, we have a bunch of numbers coming out of Japan, so on Wednesday, Thursday, and Friday. So those will be of concern towards the end of the week, but in the holiday week, it's probably not going to be too much, meaning as the trading will be fairly thin. Banks will be closed for the most part on Tuesday and Wednesday, some of them on Monday as well. So technically, Euro US dollar today up about 16 right now. We were down, we were up, been all over the map here, and really kind of a continuation, it looks like, signal here that will probably sell off again. Now, we probably have in a double top here, and we ran up here and sold way off, broke this kind of support line here, but then rallied back up. So now we're starting to slide off again. So technically, we get down here and close down below this 132 level. That would be very bearish, because as we look out further on to the weekly chart, we can see that once we break down below here, this 132 level, that would signal then a clear turnaround, and we would then sell off. So the probability of us going up and hitting that 141, 142 area that we've been talking about is probably getting more and more remote now that we're seeing more strength out of the U.S. Always there's two sides to the currency equation, and while Europe is stabilizing economically, it is not growing, and the U.S. is growing. And now with the Fed receding on their bond purchases, that makes the dollar worth all that much more and the euro worth that much less. So we could very easily see us ending up negative for this month, which would be a clear turnaround signal then at this point. So really have to see. You've got obviously another week and a half of trading left for the month and for the year, so it'll be important how we do close that up. Pound dollar also today down a little bit, down about 24.20 right now, and we had that big run up when the news came out on Wednesday, and then that was because of some good economic numbers out of the UK, and then we have since sold off. So here we are now, probably putting in a top. It ran up, made new highs, and failed. We'll have to see how it actually transpires over the next week and a half to close out the year. But at this point, it doesn't look very positive. And we jump out here to the weeklies also. We can see how this trend line here, going back several years, we've popped above it now the last 4 weeks in a row, and we've come right back down and closed below it. That's a pretty strong signal that this trend line is definitely the point at which it is meeting a lot of resistance. So here we are for the month. We are slightly negative on the month, and if we do end up negative completely on the month, then that would be a bearish sign as well, that we're probably going to turn around from here. Now, this market has been range bound in this area here since really 2000 and just about 2008, mid-2008. So we're still in the same range that we were at almost 4 years ago. And there really isn't any indication that that's going to really change. So probably need to go down and test these lows one last time here, and quite possibly even exceed them. So we've had targets of 125 on this for quite a while, so it's very possible we could get down to that point. US dollar, Swiss franc down about 24, retracing a little bit of yesterday's gains, but clearly we've turned the corner here on this pair, and we're really seeing the strength now in the dollar, and I would say that we're going to continue to see that. We have this minor trend line that we are staying above today, so that would make 2 closes above it. Monday session, if we can rally up above 90, 90-20 area and close up into there, that would be very positive. That would then set us up for some continued gains after the holidays here and after the first of the year. On a weekly basis, well, we've been kind of meandering down here with a negative bias. We just made some new lows here, some lows that we haven't seen in quite a few years. So we are turning around though, and we need to see some very, very strong momentum start up here on a weekly basis. And we need to really close up around 93, 94. That would really turn this market around and signal then a complete shift in momentum, which could be coming as these fundamental events have changed this last week. Now in the monthlies, we really need to close up around 100 to really turn it around. That would be reversing 4 decades of this trend line. So that would be a very, very big deal. That would set us up then for some wonderful trading for probably several years. When this market trends, as you can see here, as it trended down, it trends very nicely for a very long time, and it really is a great market to play. So dollar Swiss, really looking forward to that happening here soon. US dollar, Japanese yen, new highs this week again. 104.06 right now, down about 20 on the day, so really not that big of a deal. We made some new highs, and now everybody's selling into it, taking some profits in anticipation that we're probably not going to go any further. However, technically we're going to go a lot further, and if we jump out here to the weeklies, we can see this week we're closing up very nicely, and again we're up many weeks in a row, which is usually a sign that we're going to pull back, but technically there is no reason for us to pull back. We jump out here to the monthlies, now we're up 2 months in a row, and as you can see here, we went up previously about 11 months in a row, so we're just starting out again. We're on our way to that 120, 125 level, so a matter of about 8-9 months from now, we should be up at that level. So again, this is just a great trending market, and we're starting off now on a new leg up. Beautiful trade, so we're staying with it. Euro Swiss down a little bit today, down about 17. We popped up off of these lows that we haven't seen here now in several months. So nice little pop up, a little bit of a respite today. I would assume then that this next week will probably jump up. We need to close up around 124 to really turn this thing around and get us some good momentum, which I think is coming. If we look out here on the weeklies, we can see how this week now, very, very large turnaround week. So very positive for us to rally up from this point. we should now find our way to get up to that, get some momentum to get up to that 127, 128 area that we've been looking for, and ultimately the 132 level that we have targets at. Euro yen down about 9 pips today, really high 142, made new highs again this week, so looks very good longer term as well as shorter term. Now the only thing here is that if that euro turns around and gets weak on us, they could stabilize the pricing here a little bit more, whereas the yen, we do anticipate the yen to get weaker. So longer term, this could move up a little bit more, but it could consolidate as well. Now technically we're looking here at a market that's really just run off completely, and we could run up to around the 150 area before we actually start to consolidate. We had our targets at 138, so we're out of there, but technically we could keep going here and go to about 150. US dollar against Canadian, beautiful run this week, really showing some great strength. We had a very nice up day when the Fed did their thing, and we ran up, made some new highs here today again, and then sold back off. But all in all, we're still looking very good. It looks like what's happening is here, we got some sellers in here. Every time it makes new highs, they sell them in anticipation of it coming down, and really don't see that happening. Here we are on the weeklies. We can see how this momentum just continues to build, and we got this nice little curvature starting here, especially as we're making up these new highs. Looks very, very good, and we jump out to the monthlies. We've talked about this so many times. Beautiful curve here, and really, really starting to show some good momentum here. So we start taking off here. Probably in the next couple of weeks, we could see us hitting 110, 111 area very, very soon. And this market is known for doing this kind of movement, building this kind of momentum, and then just taking off. So fundamentally, it's good. Technically, it's good. It's a great market. Australia and U.S. up today about 56 after we fell pretty well this last week. All in all, though, it looks like we're going to bounce here a little bit, maybe get back up above the 90 level, 90, maybe 90, 50 area for a day or two, and then we'll start to sell off again. Ultimately, really looking for this market to sell off quite vigorously once we close down below the latest lows, which were around the 88.70, 88.60 area. So get a close 88.50, 88.40, and then we'll probably drop pretty quickly. We can see that a little bit better here on the monthlies. We could very easily close this month down at those levels. So we turn around here and close at those levels for the month. We start out the new year quite vigorously then to the downside. So really don't have much faith at all in this across the dollar. Definitely the stronger of the U.S. dollar, definitely the stronger of the $2. So that is it for this week. Please, if you're not a member of FX Addicts, please stop on by. We do offer a 7-day free trial, so stop on by and say hello. If I'm not there for some reason, please shoot me an email. If you have questions also about currencies or interest rates, I'd be more than happy to help you out. Thank you. Have a good weekend.